What's going on? What's going on? What's going on? We are back and back again. What's going on, family? Hopefully you're doing well. Welcome to our another Stock Sermon Sunday here at 7 p.m. Eastern Standard Time, 4 p.m. on the West Coast here in the United States, and also 6 p.m. In Central Standard Time. So hopefully you are doing absolutely Can't fake alive. Hopefully you are doing absolutely wonderful here on this Sunday. And you have an amazing day with your family, yourself, or whatever you decide to do for this amazing Sunday and this weekend. We are into a new month, folks. It is a new month, and that's always exciting because in a new month, it's not only just with the stock market game, it's also within your personal life. It's a fresh start. For some of us, you're like, hey, Brian, I gotta pay these bills, okay? So it's a fresh start after all that's done, all right? But it just seems always that a new month is either good, bad, or indifferent for folks. And it's all about the mindset that you have about it. And when it comes to trading, stock market, things of that nature, I always tell anyone that's beginning this or starting this is that now you can reflect on how the market moved, how you executed on your trades, how you executed in your portfolio long term, and then reanalyze and study and prepare for a whole new month. Because as some of you may know, and if you don't, a lot of things can change for the better and for the good within 30 days or less. So at any point, someone's life can completely change and shift, right? It only takes one trade, one decision, one thing that can go well in your life by you putting in the work and effort, and everything can just shift for you, right? And that's why I come on these lives, and why I coach the way I do with my private clients in life and business, and also in this financial stock market game, is because people just sometimes just have a level of belief that's not at the height that it should be, including myself. You've got to believe that it's possible for you, that you can do something better and something different. And I didn't major in economics. I didn't major in this stock market game. I didn't major in finance. I don't have the financial acumen. I messed up a couple of times. I got things going in my life that aren't always set up in the perfect alignment that it should be. But it only takes one decision to say, hey, I can do this, right? So I just want to pour into someone today just to say, hey, you can do this, and don't let anyone else tell you that you can't. Don't let anyone else tell you that it's a gamble, that you shouldn't risk, you shouldn't do this, you shouldn't do that, right? Do your own due diligence. And if you see the possibilities that are out there and whatever you're trying to achieve, that's all you need. That's really all you need. Right? Some of us have been there before. I know I have. I only need to see it once. I only need to see, back when I was in my pharmacy days, I only need to see it once that someone else could do something that was possible for me. And you can make how much doing what? You mean I can live life on my own terms and do what I want to do and help people how I want to serve and help people? And the equivalent or the money or the opportunity there is going to equate or excel past that? Then it's a no-brainer decision, right? And it doesn't mean it's easy, but it's a no-brainer decision to say it's possible. I'm going to do it. You only need to see someone make $200-$300 in 5, 10, 15 minutes for you to believe that this is possible in trading or in the stock market. That's most people's side job or some people's full-time income per day. When they add up their salary, they're like, man, I'm making, $1,500, $2,000 a week on the good end. If I have a career that I'm moving forward with, I'm making $1,500 a week. Well, shoot, this person trading is making $1,500 a week. What am I doing? So the possibilities that are out there are for you. All right. I'm not going to apologize for coming on here and, as some people might say, being preachy or chatty or, opening up this way. I don't shy away from any of that. I think there needs to be more of it, pouring into, people's mindset and pouring into their belief system that it's possible versus the strategy and the tactics. That'll come. If you don't believe it's possible for you, it's not going to happen. All right. So love you all. Appreciate you. Give me something down in the chat if you are with that. If you believe in yourself, if you got something for you, like, man, this thing is tough, right? Whatever it is you're doing, real estate, stocks, it could be business, it could be your relationship, it could be life in general, just lifing, right? You have to have a level of belief. All right. So with that being said, let's jump into it today. I'm going to give you an agenda very quickly. and take notes, and we'll have you out of here. Okay. So the sentiment right now is we're heading into June, July months. Now, for those that aren't familiar with how these months typically go for the overall market, it depends differently on the who's in office typically, or how the market is reacting for that season, right? But typically the summer months, in more of a kind of bullish market as of last year, it continues in that nice bullish trend, but the volume of the market may slow down. That's his historical context. Right. So I want you to think about it for my new folks or anyone that's just trying to understand this and actually learn the summer months. OK, why I said the last stock sermon Sunday, sell in May and go away. It's just a theme. That concept came from the New York Stock Exchange, and the brokers and the brokerages, they're going on their summer vacation. So they're not going to be as active as market movers. Right. Actively with the volume and trading and moving their money around as actively as they once were at the beginning of Q1 into tax season. And you saw the volume that picked up in April and then in May, and then the buying up and all that, right? So if you're not too familiar, June and July, typically the volume is a little bit more, I would say, palatable now. Right? Because the volume has already been extremely high. It's been very volatile back and forth, and we still may see that volatility. So that's typically what happens. But because you got to put a caveat in there, because we are in some type of trade war, because we still have a lot of uncertainty, because Trump is in office and he's tweeting every day and still, having talks with various different countries, you're going to have activity regardless. So I just want to give you a normal way of how the summer months go versus a Trump way in his first, second term of office that's now coming in. So we may have volatility that continues throughout this summer, but the summer months is typically, in trading more specifically, you'll have, more so traders maybe do more swing trades. You'll have traders based on their style, lower their volume a little bit as far as the activity or their contracts that they're putting in. They're not putting on as much risk depending on what type of trader they are because the market is moving in different ways depending on, what's going on. So what my strategy is for the summers typically is to enjoy my life, right? I typically go into my coaching mode. I have a lot of new life coaching clients, business coaching clients, and one-on-ones that are coming on for the summer months because now, hey, I get a little bit of free time from work. Kids are on their summer camps and whatever, and I'm focused on my business. So that is typically how my summer months go. And in the stock market, I typically either rebalance portfolios or I go ahead and do some swing trades, looking for trades that I can carry out through the summer months that don't have so much stress or pressure on day trading as actively. Because, hey, you may be on vacation and you're like, hey, Brian, I'm not really I want to day trade. I still will be day traded inside Leverage University. But what's a trade or an idea or something I can buy that'll carry me out through a couple of months, right? That doesn't have a lot of risk on and things of that nature. Right. And that's kind of the mindset I go into for the summer months. And then going into August, September time is when the volume picks back up. Right. And then we go into that fall, end of the year time. So if that helps anybody, let me know. Or if you already knew that and you're more experienced, you know where I'm coming from. All right. So I'm going to give some stocks. We got some ideas. I want to go over some formations. So if you see the title, you see head and shoulders. I want to go over some double tops. I want to go over a cup and a handle formation. So these are all stock structures or structured formations that typically show up in the market that will give you some type of hint of maybe what's coming next or what to look out for. All right. I have a lot of questions on that typically on the market is what's a double top? How do you know what time frame? What is a head and shoulders? That's like a bearish or a pullback type of signal. What is a cup and a handle, which is more of a bullish signal? So I'll show some of those on the markets today and I'll give you some things. We good? Can I get a 1 in the chat? Everybody good? If you're new here or you're rewatching, you can check more about myself. You can join Leverage University. There should be a small little discount code that pops up for you when you click on that link. If you need the link in the chat, I can put it in there a little bit later, but you can just go on brianmceldery.com, my first and last name, as you see on the YouTube. And then while you're listening, you can go ahead and join and get all the activity going on there. All right, we good? All right, let me share my screen. Let's get rolling. All right, so So let's start off with our fundamentals per usual. What do we got on the docket for our earnings this week? Okay, we're starting to kind of slow down on the heavy earnings season. We've had our big tech companies have already reported. We've had our healthcare companies report. We've had our finance report. We've had various different companies that have come in and reported. Make sure I'm showing. Okay, I'm showing up properly. All right, we're good this week. So now we're kind of rounding out to companies that are still very familiar to a lot of us, but we don't actively day trade on a regular. So retail came in very heavily last week, and they're starting to come in this week as well. Right, some cybersecurity companies coming in. All right, some data software companies, things of that nature. All right, and I'll go over some previous earnings that we had last week that I think have some really good setups coming into the summer months. All right. So on the docket here this week, got Dollar General. Okay, this is one, and Dollar Tree. These two are the ones that I was telling folks about roughly last year. If you remember, put a 2 in the chat or just put DG or DLTR. That will notify me that you know what I'm talking about. These two companies were beaten down tremendously, right, from their customers not purchasing as much, or the purchasing power for the consumer going down, and they just weren't spending as much money in your rural areas of the Dollar General. But we know Dollar General on our road trips, maybe it's in your particular area of the country in the United States. If you're listening here, I know I've got some viewers in various different parts of the world. So Dollar General and Dollar Tree, folks are shopping, right? So these companies are not going out of business anytime soon. So I thought they were a great long-term share buying opportunity underneath $100, and also a leap, a long dated option contract that typically is a year plus out. And that was back in January, that was back in December, and they've started to move already. So these are heavy watches that they could skyrocket, very similar to some of these others, Elf, right? Ulta, right? These retailers that everyone was like, man, no one's spending any more money at retailers, Elf and Ulta. No one's buying any makeup when, consumer spending's down. Well, you buy and you get greedy when people are fearful and when no one's paying attention, and you start considering taking profits, or be mindful of a pullback when people get greedy, or when all eyes are on one stock or one cryptocurrency or whatever it might be. All right. So I look where people aren't looking typically at the current time. So Dollar General, Dollar Tree, going to be a watch this week. More specifically on if I were to choose one, I would look at more Dollar General. CrowdStrike, heavy player there. Broadcom, going to be huge there for the semiconductor sector. They've been absolutely on a tear. So Broadcom is going to react very similar to how NVIDIA. I do not expect Broadcom to miss earnings, but again, they're already at pretty much back to all-time highs again. And very similar to how NVIDIA reacted, it popped and then they pushed it up for a liquidity grab and it sold right back off. So I'm expecting somewhat of a very similar situation with Broadcom. So I don't expect them to miss, but there may be some profit taking right after the earnings or up into it. Who knows? All right. It's a crapshoot per usual. DocuSign, that'll be interesting to just watch. Lululemon, always a big player, especially in the retail space. And they have been that was another one that was beaten down. And it is starting to recover as well. Okay. So again, I'll repeat that one more time. Dollar General, Dollar Tree, CrowdStrike. It's not to say, and I always repeat this, I know it gets old sometimes, but I have new listeners. It's not that these others aren't important. It's just what moves the market and what typically has volume and what companies people are typically looking for to have in their long-term portfolio. What I like to do with these earnings is, if I don't recognize a company, or I may, lose touch with some of them, I'll go look at their chart. I'll go look at their balance sheets. I'll go look at their fundamentals and see how the company's doing, because this is how you find companies, that may pop off in the next 15 years or 10 years or 5 years or next 2 years, that are building, that are sitting there, right? This is where we found Ionic 2 years ago, 3 years ago, things of that nature. Okay. So if you want to get some homework in, if you want to study, if you want to find, hey, where do I spend my time? Go look at some of these charts on some of these companies. Go look at their balance sheet. All right. All right. So there's that. Let's look at the economic calendar. for this week. We got PMI, ISM manufacturing. So Monday, okay, that'll be interesting. So we'll have some volatility that'll pick up the the second day of a new month. ISM manufacturing, any 10 a.m. data, and also PMI at 9:45. So pretty much 30 minutes in the market, there'll be some volatility, some movement based off that data a little bit. And then we got some Fed speakers stepping in. Factory orders, another 10 a.m. data on Tuesday. Job openings, that'll be very important there to see how our job market's doing, which gives the Fed some information on if they're going to cut rates or pause them or what their sentiment is going to be. The Fed meeting this month is June 18th. So go ahead and put that on your calendar that we have a FOMC meeting on June 18th. All right. ADP, employment, more employment data, more ISMs, more Fed speakers, jobless claims, as we know, always important there, coming out before the market. And then our unemployment rate here, again, important. So we're starting off pretty heavy the first week of a new month with a lot of data. Okay. So Federal Reserve Chairman Powell, anytime Powell's on the docket right there on Monday, he will be speaking at 1. If you don't know what Powell's sentiment is, anytime I see Powell's name right now, he is still very hawkish. If you don't know that term, that is bearish. Okay. He's still very, I don't like what's going on. I don't know what's going on with the tariffs just yet. We're probably not going to cut rates in June. We're probably going to pause again. We may have a rate cut towards the end of the year. There may be 1 or 2 rate cuts. If that, we still got to see. So what I'm looking at with Jerome Powell right now is he is not really, he's not backing down to Trump at all. And we should have known that already, that he's like, I'm here to stay. I don't care what you're doing over there in the White House. You don't have control over me. I'm going to continue to look at the market and I'm going to continue to look at the data reports, and nothing is showing me to cut rates right now. So anytime I'm seeing his name on the docket, as we've known the last couple of times, his name has been on the docket. And also when he speaks, it's been very, kind of iffy. So that's what I'm expecting about him starting off a new month of June, and maybe giving a sentiment of what's going on for the market and what he may be looking at, kind of giving us a hint into the next FOMC meeting, June 18th. All right. Let's look at the following week here. In the middle of June, next week, we got CPI and PPI. So first week, heavy data. Second week, CPI, PPI. And then right after this week, we've got FOMC. So for those of you that in Leverage University, put a 3 in the chat, or for those of you that watch my Stock Sermon Sundays pretty actively, are you seeing now that, or learning maybe a sentiment from myself or maybe whoever else you watch, is that when you have these heavy data reports, why is the market selling off? Why did NVIDIA push all the way to 143 and then it's now almost back to 130? Why did the market kind of fake us out after really good reports and things of that nature? Well, one, the tariffs are kind of back on, okay? Or essentially Trump has control again, right? They removed it from him for a little bit and said, hey, you can't do anything, and they gave it back to him, right? As an investor that's very bullish, they don't really want Trump to have that power, to get in their way. So that's why the market popped up. And I'm giving a very elementary third grade level kind of stories about how this works. Okay. Also into major data, which has been a little bit more hawkish or bearish, right? Then you have some profit taking that's going on. So you're seeing how this, I had a lot of folks around me ask, like, Brian, I want to learn more about, and I'm not saying I'm perfect, but I have a pretty good sentiment on the economy, about like fundamentals, right? Like a sentiment of potentially where we're headed. Long term, we're bullish, right? But where the dips are going to potentially come, where the dip opportunities for buying are going to come. And I'm personally looking at the kind of beginning of June, maybe having a little bit of a pullback. And then right after the FOMC meeting or the remainder of the summer, we kind of trend back up a little bit, right? Depending on how that sentiment comes out for FOMC. So beginning of June, I think is going to be a little bit shaky, right? where the levels are, and I'll give you some levels when we jump on the chart, but that's kind of my sentiment based off of the data that's coming out. CPI, PPI next week. We have Powell and FOMC June 18th. And then we've got a lot of heavy employment data, Fed Powell speaking this week, things of that nature. So if you're a bull, okay, if you're a bull, right, you are getting excited for any pullback that may be happening over the next week to 2 weeks. If you are a bear and you like to play the downside or trade the downside, there could be some opportunities coming in the next week to 2 weeks. So depending on what side or how you like to look at it, I'd approach it in those two mindsets. All right. Cool. All right. As always, I always say, as I jump into these charts, if anything on the fundamentals or if anything that you want me to cover, any type of question that you may have that I can go over that's not like, hey, give me the levels here, give me the levels there. I do a little bit of teaching on my lives on Stock Summer Sunday. So if you're a beginner or you're just learning or you're advancing, you're like, hey, I just like your perspective on what you see, right? And we can talk a little bit more advanced. You can throw it in the chat there, and I do check the chat as I'm rolling along. And anyone who throws in the chat, I do kind of stop what I'm doing, go ahead and answer your question, because I know if I'm on something and I just want a question answer really quick, I don't mind, answering it, and you're welcome to tap out, right? I'm a person just like you. I got other stuff to do. You may have date night with your significant other. You may have kids night. Like, I respect that, right? So don't want to keep anyone here longer than necessary. All right. As always, let's look over the SPY. And how I analyze SPY is, since we're in a new month, we want to look at the month and the chart a little bit fresh here from a fresh perspective. Okay. And on the month, you can see that the last 2 months have been bulls stepping back up. All right. We've got this big doji candle here where we reached a low in April of 482 on the SPY. And we reached a high on that month of 567, this red candle right here. Okay. Then we continued and really didn't have much of a pullback starting into the month of May. All right. So we had a continuation candle that only pulled back from 560 back to 555 and then just took off all month. Okay. We reached a high last month of 598 after hours. Okay. After hours. I want to be clear on that. When that news came out that they were blocking Trump from the tariffs, it reached roughly 598 after hours. Okay. And I wanted to mention that because this candle only shows that the market reached up to 595 during the open New York session hours. Okay. So most people were looking at that 600 number very, very carefully. Like, are we going to get above 600 again? Are we going back to all-time highs? Are we going to take out these, last green candle closed months and the highs there? And we couldn't do it in May. Now, the question is, can we continue this bullish trend here in June? Okay. So why I'm saying that is because, Brian, you're talking about pulling back and, we'll get into it with the weekly and the daily, but you're talking about, this looks like a big, bull flag continuation. We're just going to take off all summer, right? That is a possibility. But once we get into the smaller time frames, you'll start seeing that we have to clear above levels. Okay. Now, if you're a long-term investor, you're looking at this monthly structure and you're looking 2, 3, 4, 5 years out. And again, I have new people on here from time to time or re-listening. So I want you to understand my perspective. If you, are here all the time, you already know what I'm about to say. There is a difference between a trader that trades month to month, day to day, week in and week out, versus someone that says, man, there's nothing bearish about this chart. There's going to be no pullback. There's no selling, no profit taking, none of that. This is bullish. It's going to the moon. Yes. Every investor will say that. That is an easy thing to say. But by when, where do you buy? What type of trade are you taking? What are you buying? Because if you buy Palantir at $130 per share And you're like, it's bullish, it's going to the moon. Yeah, of course it is. But is it going to the moon now to 200, or is it pulling back to 90, then going to 200? You get my drift? So if you're new, that's my mindset, is I don't want to say anything that is going to scare anyone away from the market. I'm trying to teach or educate not only myself, but everyone I interact with, that there's a difference between what I'm saying right now that's going to happen within a month to 2 months or the remainder of the year versus what's going to happen in the next 5 years. Okay. So let's go into the weekly. Okay. Let's go into the weekly, and I'm going to start marking off some levels. Okay. So I'll start off with the monthly here, and I'll mark off this level here on the monthly, and we'll mark off the top of this candle here on monthly candle. You can see that it lines up roughly with the past sell-off that we had back in beginning of March. Okay, so we're right at that level. If you can look left, we're right at that last candle level at the beginning of March. At the beginning of March, right here where we started coming in and Trump started talking about tariffs. Okay, so we're at that same mark. All right. So if you're looking at this from a monthly perspective, we need to clear above 596 and ultimately 600 to continue any higher. So if you're a long-term investor right now and you're trying to see if this is going to continue throughout the summer or remainder of the year, and we're not going to have any other pullbacks, we need to clear at some point this month above that 596, ultimately 600. So just mark that on your alerts and say, is SPY or the S&P 500 ETF above 600? Okay. That will be the trigger to say, yes, we can go higher, and we're going to have another candle. I like to give visuals that continues up somewhere like that. Okay. And we may have a little bit more room up into 605, and then trying to touch that 610, 612, 615 and take out new all-time highs and go something like that. Okay. Now, what's in the way of this? Powell, the Trump tariffs, as far as the pause or if he makes any type of significant deal. So right now we know that the tariffs are paused, right? Or he's trying to get some type of deal done. So that is going to be the catalyst, in my opinion, that if some type of amazing, great deal gets done, then we can continue and take out that 600 and go. So I'll talk about the bullish scenario. If Powell comes in and starts being a little bit more dovish, a little bit more bullish, he sees some things in the market from our employment data, our CPI, our PPI that says, hey, I kind of like what I'm seeing. Maybe we'll include some more rate cuts, or maybe I'm looking at doing them sooner. If he says something like that, we can take off above 600. Okay. But leading into, like I said, the FOMC meeting June 18th, right? It's a little uncertain, right? A little uncertain. So 600, mark it on your charts. Let's go into the weekly. Nothing's really changed. We're in this consolidation. Nothing has really changed. We're in this consolidation. We've been consolidating for the last month, roughly, last three weeks or so. Consolidation in this channel going from 595 at the high, going down to 577, and kind of keeping roughly a channel between 580 and 593. 580, 593 is our big kind of range here of consolidation that we've been moving in. Okay. If I were to tighten this range just a little bit, I'd put a line right there at 589. Okay. That's what traders have been trading in. If they're trading the index or the futures, ES, NQ, SPY, they've been trading in this. Okay. So when you have something like this, this tells us that there's indecision. Okay. And a big move is coming one way or the other. Now, if I were to look at this and say, well, who has control? I really don't see much of, who has control. It's just based off of news. These type of candle structures are news based, because if you were to look at this candle right here and that close at 594, you wouldn't really expect a candle to just immediately fall with all that bullish momentum coming in from, May 16th week. You don't expect the next week to just sell off. And I think that's what's been catching not only beginners, but also some traders a little bit frustrated, is that it's all news driven. Tariffs are on, tariffs are off, tariffs are on, tariffs are off. We're bullish here. I don't like it here. Trump gets mad. They try to block him. He retaliates. Like, it's all news driven, and this volatility is going back and forth. And you see how we ended off the month of May. Is still a bullish candle here, but still not a strong close like this candle here. Okay. We should have, or would have been better bullish if we had closed this weekly candle above 593. Okay. Above 593 would have been a better close on that candle. Okay. All right, Brian, that's enough educating. And can you just give us the levels? Yes, I'll go into the daily. And what levels do you need to break for confidence? Above 596, you can look for calls, ideally. A lot better. If you are a little bit more experienced, you can start looking at them at 593 and see that as a signal for continuation. 593, we start to retest 596. Above 596, we're probably going to 600. It would look something like that for continuation. Okay. And that could be this week, and I'm prepared for that. Right. But I still have a iffy kind of sentiment in mind, just to be prepared, because I think more so than not, a lot of the sell candles catch a lot of bulls off guard sometimes, in my opinion. They get really bullish, see a candle like that, they immediately open up calls right when the market opens, and it just sells off, and they don't know where the bottom is, and it just keeps going and going and going and going. You don't have enough time on your contracts. Okay. So it needs to clear above 596 to retest 598 and try to take out 600. Okay. Now, if we remain kind of below this 588, 589, that's what I would say our pivot level is. Okay. So I'll mark that in red. I'll mark this in green. 589, 588 is kind of that middle zone pivot level. They're trying to decide what they do right here. Are buyers going to step in and push it up to 593, or are sellers going to step in and push it back down to 583? Okay. So you've got some levels here in the middle that are a little iffy, that it gets kind of messy in here, in my opinion. So that's why I'm looking at the bigger zones to say, if you clear above 593, you can be a little bit more bullish. If you fall below 583, it should be pretty easy for people to remember. If you fall below 583, just expect some more downside down into 580. And if we get below 580, below 579, that's where bears start to step back in. Okay. And it'll look something like that. Okay. So 593, start to get a little bit more bullish. For the short term, you still need to clear about, some of these resistance level up here, right there. And then those heavy sellers that stepped in right there. But I just wait it out if it gets kind of up in this range just to see what it does. If we fall below 583, that's our sell signal to kind of take it down to 580. Below 580, yeah, we've got 577, and potentially, who knows, if it gets a little bit more drastic, that gap fill is still in play. Okay. So we got some clear levels that we can go off of because we got enough data of reactions. Buyers right here at 583 took it back up. Buyers right here at 586 took it back up. All right. Buyers right here at 586, 586, 589. It just kind of gets, kind of in this buyer range right in here. See those yellow lines? It gets kind of iffy right in this middle. All right. Now, the headline, like I promised, Brian, what is a double top? What is a head and shoulders, right? Those are more bearish signs or failures to go higher or sell signals. So this is one that could be a possibility, which is a double top. Okay. A double top is a failure to go higher twice. And sometimes the stocks or the indexes like to try a third time or try again if they can. But typically, if it's a double top on a higher time frame. So this is a double top that could be presenting here on a 4-hour and potentially on a daily time frame. We try to get above 596 once, fail. Try to get above 596 again, and you can see there on that 4-hour, big fail, after hours, come back down. Okay. So that is something that we want to look out for to say, hey, do sellers have a little bit more control than we think below this 596? And if they continue to protect that level, then buyers may give up and say, hey, we're not going to continue to buy up at these high levels. We're going to relinquish our control right now, bring the stock back down, and then we'll buy it up at our buy levels that we want. Okay. Double top. And you can see it right here. Okay. You see right there, that double top on the left, double top on the right. And the tricky part is some might, there are people that are getting used to formations is, how do I know a difference between a double top and what if this was a bull flag? You see that big, strong push up, pull back, big, strong push up, and you see that candle, someone could look at that and say, hey, that's a bull flag to go higher. Hey, Brian, I don't know what you're talking about. This is a bull flag, right? And this is just a little consolidation and we're going to go higher. Yeah, you could say that, but formations are there to guide you. They're not to say that it's an end all be all. They're there to guide you. So if someone ever asks me, or if someone's asking like, that's not a double top or that's not a bull flag, or you don't know that, you're looking as a trader and an investor to say, hey, let me look out for this and react. That's how this thing is not gambling for people who believe it is, because I'm not saying that this is going to happen. I'm saying it's something that I'm looking out for to react to. So the more I see it react, the more I like it to form as, okay, this is officially a double top, because it starts to get aggressive with selling coming off of that level, like you just saw in that example. Okay. And that's how we know it says, okay, sellers are stepping back up right here and they're getting more aggressive off this double top. And now, okay, we can take it down. Well, Brian, what if it's not a double top? Okay, well, you'll start to see buyers step back in, meaning you'll start to see these levels hold and start to build and then we take it out. Okay, cool. We've taken out the high. You're wrong. It's like, no one's wrong. It's a reactionary formation that gives traders and investors an edge, right? To say, hey, I see this, somebody else doesn't, and we can react to it properly. Okay. So that's a double top. Another thing that I'm looking at, kind of seeing, I might try to see how it forms out, is somewhat of a head and shoulders over these last 4 days of the week. And I love head and shoulders formations. It would look something like this. It looks a little ugly in my opinion right there, because it kind of happens after hours, and then failure to go above that 593 and come down. Okay. So that would be somewhat of a head and shoulders. The neckline would be roughly around this maybe 583, 586 level. I would look at it, but typically the neckline forms right around that 586. So if I fail, you see how it's holding up that 586, 586, 586, 586. If that level fails underneath there, look what it did last time. If it got underneath that 586 strongly, after hours came down here, used that as a rejection, and then continued after hours down into lower levels. Okay. So I would kind of use that 586 as a neckline for those that need a little structure, head and shoulders. Okay. It looks like something like this. Okay. Strong push up, holds. Again, there's a bull flag, goes up, failure, holds, right shoulder, can't get back up any higher, and that becomes resistance, and it starts to get aggressive. That's more of a bearish sentiment. Here's how it kind of plays out a little bit more, so you can see how it looks below that neckline. Shoulder, head, shoulder. It starts to get below that neckline. It starts to use that neckline as a resistance, and then starts coming down. Okay. So those are two sentiments I'm kind of looking out for, just because of how aggressive the sellers stepped in again at this 595, 596 level. So what I'll be watching out for more specifically on SPY, because SPY is typically our guider for the rest of the stocks that we are looking to trade typically. Even if you don't trade SPY or you don't trade the S&P 500, even if you trade futures, it's the same thing. So if you're a futures trader, I can give you levels on there. And I'll be looking at 5,900, 5,950, and ultimately that 6,000 level on the futures on ES. Okay. So I'll be watching for two things on SPY. I'll be watching for, ideally, since we're so bullish on bigger time frames, right? Bullish strength, pullback, and we're holding. I want to kind of see if we can push back up into it again to retest that 593 one more time, right? Because I want to react based on who has control over a bigger time frame. Okay. And we know that the bulls have control, right? There's nothing bearish about the charts. It's higher lows, higher highs, but we're starting to consolidate up here at resistance. So I'd rather see it try to push up one more time, and whether we take calls and we trade it up or we just wait because it's heavy resistance up here, I'd rather react to that versus it just, fall and break that. Because if it pushes up, I can confirm that, okay, this is resistance and this is all sellers stacked up here, consolidating, trying to take it down. All right. But if we fail that 586 and get below 583, I'm cool with that too, because it's kind of confirming that, okay, we're broke below a neckline, consolidation, and we're coming down, and okay, we can get a little bit more aggressive, down there. I just like always to trade based off risk to reward. So this can give me a better risk to reward if I push up first and I can see that sellers step back in. I can get some puts and scalp it back down, or I can confirm this is heavy resistance, versus sometimes when you're trying to chase puts down here, right? I've got to get my, resistance right here at 586 versus up here. And sometimes what you'll have happen is you'll get down here, right? And then rip right back up sometimes. So it's just a little tougher chasing. But I'll be prepared for either one, whatever happens. And typically the first week of a new month, I'm typically a little bit more patient to see what's kind of going to happen. So if we see some trades tomorrow, great, but still kind of ugly in this consolidation. Okay. Pretty long SPY analysis, but once we understand this and our levels, I can react off of here, see what SPY is doing. It gives me a little bit more confidence if I see a good setup on the rest of our stocks. Okay. Let me check the chat. If anyone has any questions right now, we good? Yeah, it's a tough range. It's definitely a tough range. I need some rent money. Yes, sir. What's going on, Tanvir? How you doing? What's going on, Dreamer? What's going on? What's going on? All right. Let's go over QQQ, and roughly the same thing, right? Roughly the same thing. Now, what I like about QQQ is that there is a little bit more of a clear kind of level here. If you look at SPY, right, maybe I'll mark it off here. Yes, there's a clear level there, all right? If I erase all these, and there's a clear zone of resistance right around there. I've got a little bit more test on QQQ. You can see 522, 522, 522, 522, 522, 1, 2, 3, 4, 5, 6, 7, 8, about 8 times that it's tried to break through this 522. Okay. So it's pressing up on it pretty strong. Now, that is a key level to understand. Okay, cool. If it breaks above 523, like if you see QQQ intraday above 523 into the 524s, right? It's going to try to retest that 530 again. Okay. So I know a lot of us, more so in leverage. Like I've gotten some of my folks in leverage really addicted to puts and really addicted to like aggressive down sells. Cause when it gets going, you can make a lot of money on puts and a lot of money on the downside. Long term, right? Little, continuation back up. It's going up. Our long-term portfolios, fine, whatever. But sometimes it's fun to just, those big sell candles are fun. Okay. For trading purposes. So let's watch this 522, 520 level up here as heavy resistance. And we see that there are some gaps to fill down below. And we can see that there's aggressive sellers that had a push and a fail back below. So that push and fail back below is not what you want to see if you are a bull, because you're getting excited that this was going to hold 523. And if bulls were stepping back up, they should have done that. But guess what they did? Look right here on Thursday of last week. We came underneath and turned that right back into resistance. All right. So that's not what you want to see if you are a bull on the QQQ or the NASDAQ, is a level that you've been trying to break through and it fails right back underneath. Okay. So again, congrats to those SQQQ holders that are still holding their shares. Congrats to those SQQQ put folks that are in there with me with those puts out into July, and maybe some people that have been getting interested in those SQQQs as well. All right. So if you have questions about that, you can go watch the previous video where it says SQQQ. I think it was 2 videos ago or so, 2 or 3. All right. So 523, got to clear it. Now, intermediate levels in the middle here is roughly I'm going to just put it as 517, 518 right now. Okay. That's kind of my pivot point, kind of like 588, 589 on SPY. It's kind of my pivot. Okay. So I mark my levels in pivots to give me a sentiment for the day. If it's below that pivot, I'm like, okay, we're a little bit more weak, a little bit more bearish. If we're kind of above that pivot and holding, I'm like, okay, it may want to try to retest the high again. So my yellow lines are typically my pivot lines that just give me a sentiment for the day. Okay. Once it's above or below that line, I kind of get interested one way or the other. Okay. Below 517, with the amount of selling that came in here, you can see left right there, 517, right? We'll probably, try to retest 515 and then ultimately like 512, right? So it's exactly what it did on Friday. It went all the way down to that 512 level. Okay. So my gut again is telling me, and my analysis is telling me, that could this be another head and shoulders? If we can't get above that 523 and we start seeing more big sell candles, because that's the only way that personally I would see bulls stepping in heavily. They'll try to keep holding up these levels, as you see, like right there, all right, right here, right there. They'll still try to kind of catch those bounces and scouts back up to try to hold the market up. But where's the ultimate pressure? Sell, 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 big sell, big sell. It's very heavy up here. So if you're a bull and you want to trade calls or trade the upside, I'd be more interested if it gets above 523, because then you can hold those calls a little bit more confidently up to, 530 plus again. In this range, I'm more interested in being kind of a seller, or more interested in, maybe looking at resistances coming down for trading purposes. Okay. So 517, if we just sit around here and continue to sit in this range, it's kind of ugly. It just tell you ugly. Where it's going to get more interesting, we get below 512 again. Okay. I really want to see the market get significantly below 512 and kind of close a 4-hour candle or an hourly candle, or have a stronger close of the day week below that 516, 515 level. And I need to see something like this close the day. Like something like that. Okay. And then if we break the next day, then we've got 508, 510. and it filled that gap. Okay. So mark 510 and 508 as big key support zones that the market might try to hold up. 510 and 508. This will be your zone of what do we do if it pulls back into that gap. Okay. Because again, we're in a bullish trend. Got to be careful that this doesn't do this and rip us right back up. And if it does, if we reclaim 512, then it could be a V bottom and we start trending back upwards. Okay. Because the bulls are still trying to hold control. 508, that is the level. Below 508, I think they're going to give it up. Below 508. So I know it's like, man, below 510, like I want to get continuation below 510, but you still got to be careful. Look how many buyers stepped up right back here. See that reclaim 510 and then continued. So my level now is kind of 508 below that. Okay. That's where it gets real ugly down into that gap. Right. So again, to sum up QQQ, I think we'll sit in this range, for a while until it decides what it wants to do based off of what Trump's doing, based off what Powell says, or something's going to happen one way or the other. Something's going to happen, but it's got to get out of this 510 to pretty much 522. All right. We good there? All right. The weakest of the bunch, okay, where I'm a little bit more bearish because the small caps, IWM, the Russell 2000, RTY and futures, not really getting much love because the interest rate cuts are really not on the table. And IWM typically reacts more positively if Powell is a little bit more dovish or bullish on having cuts or rate cuts. So you can see here that the IWM has been fading a little bit harder. You can see a little bit more of a clear double top, a little bit more drastic rejections. It's almost like a quad top or a triple top, right? Where that 210 is very heavy. So the 210 is kind of like our 523 on QQQ. Got to get above that 210 to really start taking off to the next zone, which is 517, 515, 520, things like that. Okay. So it would be some type of big push back up above here like that. Right. Otherwise, it's just going to, chop in between 206 and 210. Okay. 206 and 210 is your consolidation zone. I talked about that, I think, last week. So now it's below 206. So guess what the zone is now for IWM? Right? 206 back down to roughly, I'd say 200 right now and maybe 198. Okay. So it looks like that. So if you can see and mark some of these, some are clearer than others, but IWM above 20, just say 207 to be clear, but 206 is the level. See how it was holding up support, 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 support. And then look at this candle right here on Friday. See that sell kind of push up and then fell, pushed up, fail. So it's turned that yellow line or that pivot point back into resistance and starting to get a little bit more selling pressure back to the downside. Okay. So IWM, in my opinion, right, if we can catch it, looks pretty clean for at least a $3 to potentially $5 move, depending on how aggressive it gets. But IWM's been, we haven't traded as much, which I enjoy trading IWM in a very volatile market because it doesn't move as drastically, but you get really nice contract movements on it. So I would love for it to give one little bit more push back up closer to 205, 206, see how it reacts. Or if we get a failure and it continues maybe below 203, right, we could get some action, right? So I'm going to be looking at kind of this previous day low here, which would be right at that 203 level. You see how it held up there, right there at that on the 21st of May, kind of bounced right there, kind of bounced right here, turned that into a resistance. So I'll probably be watching that 203 and see if it can break underneath that 203 like that. And then maybe we can catch a retest and then try to take it down. That'd be a little bit cleaner in my opinion, down into 198 and 200. All right. So I'd rather have it bounce, push up a little bit, and then try to catch it back down if we can see another failure. But IWM, as far as the indices, one of the weakest of the bunch. So just want to be mindful of it. And if it gets away and I can't catch it, then I'll just wait for the next, bigger zone to kind of come in. Would be 201 and 200. Okay. So big red zone right there, big green zone, and then kind of these little pivot areas in the middle here where I'd rather trade it off of here. I'd rather trade it off of here. So you kind of decide what you want to do in the middle here. Dow Jones, US 30, DIA. We could see a clear resistance here, which if you're not too familiar about what's in it, I would definitely make a watch list out of it or look it up. If you're not too familiar, that's what I do typically, because if I see an index that is, looking pretty good, what is heavily in that index? So if you see here, I have SPY, QQQ, and I typically put, the top 20 to 30 with DIA is the US 30. So the top 30, NVIDIA, Amazon, Apple, Microsoft, and I'll look at those and say, are those 4 top tech stocks, which are Mag 7s, right? Are they fairly weak? And is also the DIA showing a little weakness as well? GS, American Express, how are they looking? Are they looking more bearish or heavy? I'll look at some of our favorite names. Home Depot, does that have a gap and downside? Yeah. Okay. Does Boeing? Boeing has been one of the strongest movers in the market, but starting to get to a heavy resistance right here around 210. That psych level is starting to see some sellers step in right at 210. So could be. Caterpillar. Yep, heavy right here at 355, right there. So if I see a lot of stocks that are within that specific index getting a little bit heavy, I should say, not weak, but heavy, then I can confirm, okay, maybe I might want to trade some DIA stocks potentially. Walmart, bullish, break above 100, push up into back to all-time highs again. McDonald's, pretty big mover there, just ugly up in here. So Visa, bull flag there, trying to take out 370. You get my drift? Hopefully. Y'all stop me in the chat at any time if you're like, hey, can you slow down, explain this? Or no, I don't know what you're talking about. You're more than welcome to say that. I think I attract a pretty intelligent group of folks, not to say others aren't, but I think I attract a very professional group that's like, okay, I'm just conceptualizing, I'm just watching. And then the more you hear it, the more you'll start getting the concepts. All right. So those are our indexes. Let's go into NVIDIA. One thing I've been watching, I put it on my Twitter as well, and put it inside of Leverage University, is still not giving up on this kind of head and shoulders idea on NVIDIA. So NVIDIA has got to clear above 143. Okay, first of all, it's got to reclaim 140. Then it's got to clear above 143 to even continue back to all-time highs. And I've been talking about this for a while. Maybe put a 5 in the chat if you've been hearing me consistently saying, like, yes, I'm bullish on NVIDIA. Yes, it's going up, but by when? And we've already made a move off of 86 all the way up to 143 into their earnings. Their earnings was another beat, but another big kind of sell failure off of this level. So we've got to see some recovery pretty soon on NVIDIA for it to continue back up, like people want to go to 150 plus. Okay. So I'm looking at this weekly structure here, and I already showed you head and shoulders. So you can kind of see a clear neckline right there around 90. Left shoulder around 141, head all-time highs, double top at 153, right? We pulled back, came back up to this left shoulder area, failure right there at that 141 area, almost to the T. And you already saw what happens. Okay. So I'm not saying it's going to just tank right here like that and come back, but I told you my buy levels on NVIDIA for a while. Pick it up at 86, pick it up at 90, but also I don't know if it's going to happen again, but pick it up at 50 and 60 bucks. I am not going to even get that drastic until we see some things come down. So, but what I am saying is that this is looking real interesting on this head and shoulders right here. Okay. Now, what will take this out? Remember what I said is that this could just be a big bull flag. Brian, this is a big bull flag, a consolidation up here, and it's just a bullish consolidation, and then we're going to continue up here like that. Well, yeah, if we get above 143 and we hit 144 and we start getting above 150, yeah, I will consider that. But if I see sellers stacked up here again like this, I'm not really interested in that until it gets above 143. In the short term, right? Your long-term portfolio, you want it to come back, buy more, right? I'm talking about trading. If someone's like, enter calls on the video every single day, enter calls on the video every single day, just keep buying the dip. Okay. You better keep your stop losses real tight at 130. Okay. Am I talking crazy? Like, let me pause it for a second. Put a 6 in the chat if y'all are with me. Like, are y'all seeing, or is anyone like with me on the same type of sentiment? Is everyone learning every single week? Most of the stuff has been playing out. I'm not saying I'm perfect, but most of the stuff eventually, that's it, that selling pressure he was talking about that was coming in, right? Oh, like, yeah, I got some call ideas up here, but it really didn't, my holding calls really didn't like, yeah, I made some money, but if I held it too long, you're right back in the channel. Am I talking crazy? All right. So I'm just saying that if you were only a bull up here and you're trying to trade NVIDIA up and you wanted to go to 150, you needed to hold 132, right? And ultimately 130. Okay. 132, break back above 137 because it's back in this channel. See that channel right there? So you need it to do something like this, which you'll probably pull back and fill this gap to 132. You need it to build off that 132, get back above 137, and then start pushing back towards the highs like that. That's what you want to see. All right. So I don't like really NVIDIA back in this channel like this. Personally, we could scalp it. If you're in Leverage University, we already know if we see this little gap, we can maybe get like a $2 to $4 move off of it. But is it worth it if it just falls immediately to 132? It's a little bit too close. We'll wait to see what it does at 132 or fills the gap. See buyers stacked up right here, buyers stacked up right here, buyers stacked up right there again. Okay. So I want to see how it reacts around that 130 to 132 range. Okay. And see what we do there. If it just falls. Okay. Now, Brian, why are you saying keeping your stop loss tight if I'm in calls, depending on what your expiration date is because if it gets below this 130 and we get back and you see on my right hand screen, if you see that 129, 128 range and we pop back up and turn that 131 into a resistance, you're seeing 123. So if you're in calls and you enter calls at 132 and it falls to 123, do you think you're going to be up? Probably not. Right? So that's all that a trader or investor is telling someone. If you're new or someone is new or you're teaching someone or you're telling someone about something, it's like, hey, I'm bullish on the video. Maybe I should enter some calls. Where are you going to enter your calls? You can enter them down here at 131, but you got to keep a stop loss below 130. All right. And then try to trade it back in this range or just wait for a breakout for more confidence. Wait for it to get above 137 again. Above 137, you can take it back up to 140 and probably push it back up to that 143 again. Trade the channels if you can, as confident as possible. And it's been tough. It's been tough to trade the channels and my members inside of Leverage understand that is I haven't been very active or as aggressive on my day trade as of late because it's like in and out very quickly, or I don't see anything yet, or I missed my entry, or, you know, it already got away from me, or, hey guys, I'm out already. It's just not been very fun to trade in this consolidation over the past 2 to 3 weeks. Long terms holding up great, whatever, all that kind of stuff. But trading wise, you've been just scalping in these areas and getting some decent moves. All right. We good on the video? Let me check the chat. We good? Questions, thoughts? Okay. Tanvir's been getting it. Appreciate you. Let me see. When you see a move like SBET, do you focus more on small caps? What's going on, NASCAR All Out? How are you doing, man? Sub $3 stock on 522 hit a high of 124 Friday. Okay, let me check that out. Okay, I don't want to ignore your comment there. Small cap is hot in certain tickers. Not every day you get a ticker run over a 40x. It wasn't an intraday move, but still impressive. Okay. Appreciate you. And I see you, Tanvir, as well. I want to come back to you. So he's talking about, or she, I don't want to assuming, I mean, there's women NASCAR, but you get me. SVET. SharpLink Gaming. I see a lot of these out there. So for example, like I'll make this in correlation to like a GameStop or something that shows up on Reddit, or, you know, I'm still a part of some of those free Robinhood Facebook groups that people are in. It's like, hey, did you see this? This went crazy. It's like these small caps or these companies that have a news spike like this, just say NASCAR All Out, or if you want to put your name, you're more than welcome, but just say he's a gamer, or he is in this space and, you know, profile, what is it? Online performance-based marketing company. Okay. It's a marketing company, sports betting, iGaming industry. So if you're in that industry and you're watching this stock and you're paying attention to their financials, and you know when they have a new release or whatever it might be, and you're watching it, then you can catch stuff like this, right? And it doesn't even have, this would be more of an equity trade, meaning someone owns X amount of shares. It doesn't even have an options chain on it, as you can see. So you would have to trade equity. So you buy, you know, 1,000 shares at $2, and now you are, what's the numbers on that? Right? What's the numbers on that? 1,000 shares at $2,000 or $2, that's $2,000. And then, yeah, you got 1,000 shares. What is that? 124,000. So you turn 2,000 into 124,000 if you sell at the top. Yeah. So how I look at these, or these small caps, NASCAR All Out, I personally, like, it's cool to see, but if you're not watching it or paying attention, I really don't try to spread myself too thin with too many things unless someone brings it to my attention. Hey, Brian, did you see this? Or if you got a friend or something that says, hey, you should check this out, I'll go do my due diligence and research it. And if it's at low enough and I see some build on it, like for example, I'll still use my technicals on it. And if I saw this build right here, you see that build on a 1 hour, see it consolidating. I see some volume picking up, and I'm like, man, okay, it's starting to form some volume, breakout of 366, breakout above 423. Okay, maybe I'll buy some shares at $4, and you just expect it to maybe go and double. So you take it from 4 to 8 and you've doubled your money. And then if you get some kind of crazy pop like this, then yeah, you get yourself in and you buy it, right? But if I can't get that, then I'm just like, whatever. So I don't like chasing. It's kind of like the meme coins with the Trump coin and things like that. If you didn't catch that move, I would wait for it to come all the way back down to underneath, you know, $30, $20, and maybe back into the single digits, fill that gap and reanalyze. It's just a pump and dump for right now. I don't know if you want that full analysis on it, but I know other people like to hear, and they hear those things out in the wild. Yeah, it's crazy. Yeah, just make sure I answer your question. When you see a move like that, do you focus more on small caps? No, not necessarily. Not necessarily. When I trade small caps, I'm not really trading the individual stocks of small caps a lot. Sprouts has pretty good movement, right? So if you've never seen Sprouts chart, absolutely just amazing chart. I mean, if you would have bought Sprouts in 2019 when it was popping and everybody was getting healthy and, trying to shop other places underneath $30 and you take Sprouts to almost 200, right? Sprouts is one of the top tickers in IWM or the small caps, but I just trade IWM. Or if you're in the futures, you trade RTY, right? So hopefully that answers the question. Let's see here. What'd you say, Tanvir? I am seeing QQQ at a strong secondary resistance of 540 if it can break through 523, depending on AVGO earnings. You're absolutely correct. Yep. So Tanvir is talking about this consolidation here, and he's talking about that next big resistance, that if it breaks out of that consolidation, what's the next level it's trying to trend to that you can hold to? 536 and 540. All right. 536, 540. Got some micro levels here around 532 that I would look at. All right. But if it breaks out of 523, I really don't see much else, especially like he said, if AVGO earnings, which is on Thursday after hours, AVGO earnings is great, pops out of that 523, and that's what'll take it up. Because you see buyers stepped in pretty strong right around that 512. So up in this consolidation, I would look at it more of a bullish consolidation personally. But it can go either way. It's all dependent on earnings and news. So anytime I see this, I typically try to wait and react versus try to guess which way it's going to go. Either way is going to be a big move. Either way. All right. So we good there. Above 523 on QQQ, 530, and then above 530. Probably back to all-time highs for 536, 540. NVIDIA, you need a back above 137. Okay, for bullish continuation, back to 143, and that'll be probably contingent on AVGO earnings. Yeah, everything's going to be waiting on that. All right, let's speed this up a little bit. Apple got hit and pretty big rejection here at 203, and it touched 207 after hours with that news spike. And as beaten down as Apple's been from all the tariff news, I'm starting to get a little bit more bullish on Apple with these higher lows. It looks very similar to kind of how NVIDIA was moving down here. Remember when NVIDIA was, popping, failing, and everyone was thinking it was just going to tank down to 70s and whatnot? It just kept holding and building and slowly building and then just took off. I'm kind of looking at Apple roughly the same way. It's this interesting consolidation just right in here, that 195 to 200, that something might be building there for Apple, trying to get back to that 220, 225 level. But we got to clear some levels or reclaim some levels first before we can get interested. So I've got my eye on Apple, trying to look at it as more of, okay, it's getting hit pretty hard with a lot of these big rejections, but it's still forming higher lows, higher lows, higher lows, and then another kind of higher low, to where when it got that positive news, people are ready for this thing to just take off back to 215, take off back to 220. So when I see a big name like Apple or, NVIDIA consolidating at highs and AVGO may have good earnings, I'm like, I don't know if this thing's ready to go down yet unless FOMC just takes us down, right? Does that make sense for everybody, hopefully? So I'm going to show you on Google as well, okay? Google was doing the same thing Apple was doing kind of down here. You see how Apple, it looks very similar when Google was, down here getting hit, and then just started building and had some good news and just trended upwards, right? Just trended upwards. So I'm looking at roughly the same thing. So I don't really have one sentiment either way. I'm just kind of keeping my head on a swivel to watch key levels in the volume in one way or the other. If I see heavy red, I'm like, okay, that was a head and shoulders. We're coming back underneath 163 and coming back down. SPY's breaking underneath that 583. Okay, we're coming down. So I'm reacting off of those like pivot points and levels on SPY and QQQ. All right, QQQ is above 583. Okay, I'm 523. All right, this is probably going above 177. Google's trying to go to 181. Okay. So for my Apple folks, I would start looking at Apple as a little bit more consolidation bullish right now, unless it breaks below 193. If it gets below 200 and then gets below 193, okay, cool. But until then, I would consider this a little bit more higher lows, and then bullish to try to, take off back to the highs. All right. Amazon had a beautiful, if you were in live trading with me on Friday, this Amazon was absolutely amazing. Okay. Called it out from kind of open. I was looking at Amazon. I loved it below this 206. See that big pop, and then it fell back underneath this 206 level. You see those sells coming in, sells, and then right at the end of the day, sell underneath 206. I entered Amazon puts right around this 205.50, and it just stuck. Made about 30%, but then contracts went about 300% from here to here. So $86 turned into about $400 per contract. All right, so Amazon's going to be high alert, high watch, because I like the level that it's showing here. So if Amazon is below, it's going to be one of my top watches kind of for like a day trade potentially, if we can get the contracts inside of leverage and we're in there live trading. If we can kind of get it in a day trading market to kind of continue underneath this 206 area, I'm interested in Amazon again. And for those that are listening that are not inside of leverage, take it as you will. It's always fun to trade and have ideas. So if you want to join Leverage University, you're more than welcome. So even if you know how to trade, it's always better to trade with people, in my opinion, or to have ideas to bounce off of. So the contracts I'll be looking at for this week would be the 200 puts for Amazon for weeklies. Okay, that'll be 200 put if I see it continue to hold underneath 206. Okay, so just put that on your radar if you want to take that trade or look at it or take it on your own or take it with us, right? If I continue to see weakness on the market, I'll be watching Amazon to try to, slowly start to fade again, go down to 200. And if it gets aggressive, I could see 195 on Amazon back down to that level. Okay, and it would look something like that. That's why you see a lot of interest on that 195 put and some volume picking up on that 195 put. And right now the 195s are sitting about $60. All right, for a weekly contract. Now, weekly contracts, I would say, are for a little bit more experienced, or, just make sure you know what you're doing and you take your profits when you see green, leave a runner, things like that. But that could be an interesting trade this week. Would be Amazon back down to 200. If it breaks underneath 200, then we're coming down to 196, 195. All right. So that's a trade I'm watching out for this week. If Amazon continues to hold underneath this 206 and we start to see it pull off of there, 203, 202. Okay, cool. I'm comfortable jumping in those 200 puts. All right. You're welcome to go higher. You're welcome to go to 205s and then 202.5s, but that's going to be one of my top watches for kind of a early June day trade, get some green, get some profits going on for the month. All right. Let's see. All right, my Tesla folks. What's happening with Tesla? Okay. We're getting some profit taking. I'm not going to say big sellers stepping in, all that kind of stuff, because I do have some, serious Tesla bulls around that might get upset. Okay. But Tesla right now, 370 is some key resistance right there. As you can see, 370 came all the way back down to 221. There are some gaps to fill, but it's got to clear underneath some levels. So I think the level to watch personally, if Tesla gets a little bit weak, will just be that previous low below 330. If it gets below 330, probably coming pretty aggressive back down to 300. And then we'll see how it reacts at 300. But as long as Tesla's above 300 and 315, it's going to remain a little bit more bullish personally in the short term. Tesla typically has a positive June. Okay. Tesla has an event. So if you want to mark this on your calendar, Tesla has an event, that robotaxi event on June 12th. Okay. June 12th. So there will be some action, some volume on Tesla leading up to that June 12th date. Now, is this a buy the rumor, sell the news event? Right? Because people weren't really impressed by that robotaxi. When the event came, they were excited, and then Tesla sold off. Okay. So I'm wondering if it's kind of the same similarity where are we going to take off with that event, or is it going to be more of a pop and then, okay, cool, the event's over and we're coming back down? I don't think it's going to be that drastic, but I'm giving you an idea. Right. So I'm always a little bit more cautious when big news events are coming out, because that's when investors like heavy brokerage funds and big money players, they typically trap a lot of retail investors saying, oh man, the robo-taxi event, buy calls, bullish, 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 bullish. And then you buy calls all the way up into it. And maybe it takes off for a little bit. They trap, they pull it back down, buy it up, run it right back up. So they run it up after the event or run it up into the event, things like that. So put June 12th on your mark. I'll go back to the previous June months of Tesla, and they're typically more bullish in nature. So if I go back here to last June on Tesla, you can see right here, last June on Tesla, month of June, consolidated, and starts running up all June, right? If we go back to June of 2023, you see it was here at 180, starts running all the way up all June. Okay. June here consolidates, and then starts running up into July. Okay. So it's a little bit of a trend. If I come here, where is June? Right here. Just starts trending upwards a little bit, 190 up to 232. And then throughout the remainder of the summer and into the fall, we go, it's just 2021. Okay. So any pullback on Tesla back to some of these support levels, they might be trying to take it up for June if the numbers are good, if the robotaxi event is good. If we pull back to 300 and people get a little bit fearful, it pulls all the way back to 300 and then takes off, I could see that. So any pullback on Tesla for the month of June, it may be a little bit more bullish in nature. The only concern would be if it gets back below this 190 level. I'm just going to mark 190. If it gets back below 190, something like that. But I really don't foresee that happening if it's had more of a bullish structure in the short term. So if you're a Tesla bull, if you trade Tesla, there you go. TSLL. All right. If you get any pullbacks on Tesla, you could pick up more TSLL shares closer to $11 or $12 or closer to around $10. Okay. So TSLL is the leveraged 2x bullish version of Tesla. You can see when Tesla was back at all-time highs, right? It was at $41. So if you catch it at $10, Tesla just goes on a run, goes all the way back to all-time highs, right? Now that Elon has left Doge and he may have more focus, people may be like, okay, I entrust back in Elon to kind of have a little bit more attention on the company. They have some decent numbers come out, right? So any pullbacks, TSLL, maybe put your markers on $10, $11, $12, things like that on pullbacks on Tesla. If you are bullish on Tesla, take a look at that. Previous highs are sitting right at $12 on TSLL, which will be right at that 300 to 295 range on Tesla. Okay. So that's kind of what I'll be looking for. Market on TSLL, be marking at 13.82 or maybe just $14 right there. Mark $14 even. All right. I'll take some, if y'all want to throw some stocks out, I'll do some analysis. I literally can go through. What are your thoughts on Palantir this week? Literally about to ask that too. Palantir, big bullish movement here. I didn't really read into too much news on what it did. So let me ask you this, Trent. Are you asking from a long-term perspective, or are you asking from a trading perspective, or both? Like, what first came to your mind? This more of a teaching moment. Hey, what do you think about Palantir? I'm just trying to get everyone also to ask better questions. Hey, I'm looking to trade Palantir this week potentially. What do you see as a good trading opportunity on Palantir? Hey, Brian, I'm looking to pick up more shares on Palantir. Is now a good time to pick up more shares? Like, what type of question are you looking to answer on Palantir? Because there's two different type of answers. Trade. All right. The easiest trade to take, in my opinion, on something like Palantir now is to wait for a breakout trade. Palantir above 134. You can enter calls. All right. I would even consider above this 130. As long as it holds above 130, right, and takes out a new high, you can enter calls. And what kind of strike price would you look at? Or what type of contract would you look at? Trent, I'm going to give you two. And for everyone else, you're more than welcome to look as well. Depending on I'll give you a target I could see. I could see Palantir going to 140, right, over the next couple of weeks or for the month of June plus. So if you see it going to 140, maybe someone sees it going to 145, something like that, I would take it very easily because it's an uncharted territory. All right, so I would look at it going, if it breaks out, going to 140, most likely, pretty quickly. So it looks something like this. So I'd probably try to target maybe June 13th and maybe look at the 140 calls, something like that. They are pricey. So that's the only caveat, and it's all relative. Like if you want to spend $300-$400 on a contract, that's what you got to do right now to trade Palantir personally, safely, right? This week on Palantir, a lot of interest on that 138. So it could be a weekly trade as well. The 140s and 138 calls could move on Palantir as well, right? So you may not get to 140 this week. It could. I could see it, especially if AVGO takes off. Like you said, Tanvir, AVGO takes off and Palantir moves with it and moves with the market and we get a breakout. You could see that 140. So I would probably look at and keep that 140 contract on watch for an entry maybe tomorrow or Tuesday, Trent. And if you can get two contracts, great. And then hold one, maybe as a runner. But as you already know, you've learned your lesson. Those weekly contracts, the later in the week it gets, we got to be more mindful of it. Is it close to our target price or our strike price? So yeah, I would look at that 138. If we can get it around $200 or underneath 200 for that 138, I think that could have some movement on it. If you have a larger, account or someone wants to spend a little bit more money safely, I would look at the 135s would be a realistic movement there, which are about 300. They'll probably be underneath $300 tomorrow morning as Palantir may pull back just slightly. Okay. I like how much bullish movement was on Palantir on Friday at the end of the month. So that gives it a nice potential for a pullback. Take out that 132, going to 135, going to 138, and then 140. So that helped. Maybe I should do a video over how to pick contracts. Let me know if y'all like that. Because like Brian, you give out so many different contracts sometimes. How do you know which one's the best if you're trading options? Right? The safer contract is you're gonna have to spend more money, and you could do someone could do the 135s for 2 weeks out and just spend $600 and it'll be a little bit safer. So you could treat that as a day trade, spend $600, really not lose money at all, personally, in my opinion, because you have 2 weeks on the contract, but you're spending $600, right? But a lot of people don't want to do that, right? So they're risking a little bit more by choosing a weekly contract that's cheaper, but it might not, get to their level by the time they want to. So if you really want to trade safely and you want to put a little bit more money, or you don't mind put a little bit more money, choose the same strike price, but just give it 2 weeks. So if I say 135, I can see it this week, next week, pretty easily. Then choose the 135. But hey, I'm not going to do a weekly, Brian. I'm going to just choose 135s for June 20th and spend $600. Or hey, Brian, I'm going to, 140s, put 2 weeks on it. I'll spend $400 and it'll move towards that it might not move as fast, but I have time on my side, right? So you can day trade 2 week out contracts if you want. So if I ever say a strike price, for anyone listening or anyone Leverage University, you're more than welcome to just choose a longer contract. Okay, Brian's trading, or his group is trading the 135s or 138 weeklies. Cool. I'll trade the same strike price, 135s, but I'm going to choose 2 weeks out. You can see they still move, right? On Friday, those moved 150%, but this week's moved 400, 500%. It was just a little bit more risky because the contract expires closer. Good? Yeah, you're so welcome. I know I answered your question pretty quick, but typically try to expand it for anyone else. So I do like the bullish momentum on Palantir. You can see on a daily, pretty clean breakout of a bull flag. So let's do a measured move here, there. And let me measure the move from the breakout. The last flag, move it there. That takes us about it says 147, but I would say about 140 to be realistic in the short term. But yeah, you could definitely squeeze, gets above 134 and goes. All right. Beautiful. Appreciate you, Trent. All right. Let's go to some that I like that aren't typically talked about, and go ahead and put your questions in the chat, and we'll round up at the top of the hour. All right, Uber, main watch, or one of the main watches here, as the chart looks very, very clean, in my opinion. Okay, Uber's had a really clean chart here, and I know it got some, selling pressure that came off of Tesla's robo-taxi, but it could also benefit from that depending on how the event reacts. Okay, so I like the chart, not really paying attention to the news too much, because look at this. Last time it pulled back, broke out of this 64 range, came above 64, pulled back, bounced, held, broke out a little bit, consolidated, broke out above new highs. Okay, and it broke out of this consolidation channel. All right. So guess what it's doing? What is this? A break and a retest. Hopefully right there. And looking at that. Okay. So this is an early entry on tomorrow or this week for Uber, whether it's shares or you want to maybe take some longer dated calls for a couple of weeks out safely on Uber. It's a fast mover, but also, it could consolidate and move around. And these contracts are a little bit more affordable for most people. Okay. So I want you to take a look at this June 20th date, and I want you to take a look at this 90 call. Okay. This is some free game here. 90 call for June 20th. Okay. Look how much interest, and this is just a gauge that I have personally. Look how much interest is on this 90 call. And I don't look at that as something that's an end all be all, but I'm saying, hey, where does it want to try to retest? Back up to 90 and back up to 93 and try to take that out and go to 95, and it's trying to get to 100. It's close enough. It's trying to get to there. Okay. So if I can see it realistically, and there's also a gap right there, I'll show you a chart that looks very similar to this that I missed the trade on Thursday and Friday, which was HIMS. Look how HIMS broke out, pull back to a key psych level, consolidated, and then it's starting to build. All right. I want you to look at these two charts. See that? Bull flag. And someone might call this a little falling, a wedge that comes into here, breaks out with volume. And where does it try to rotate? Back to the high. So after it breaks out of that wedge, it's at 56 now. It's trying to go back to 66. Okay. So put HIMS on your watch. We'll talk about that in a second. But Uber starting to do it before it's breaking out. Okay. Pull back. Consolidate. Start seeing it hold. Start seeing it hold. Start seeing it hold. Last time it held here, 82, 82, 82. Build. Strong move up to 88. Strong move back up to 91. Okay. So Uber, I would definitely keep this on watch around $80 to $82 as a potential starter entry if you'd like to look at it, and keep your stop loss below 80. The closer it is to 80, 81, 82, it's a really, really good entry. A more confirmed entry is if we see something like HIMS, it's like, dang, it's already gone, right? Because then we can catch the pullback, right? So a back above 86 on Uber, if it just goes above 86 to 87, that's kind of our confirmation right there. Okay. If it pushes straight up from this straight down move, goes straight back up to 87, take a pullback and go. Or you can chase it a little bit. That's kind of our signal. But in the morning or right now, sitting at 82, 83 is kind of like an early starter entry, meaning, okay, cool. Maybe I'll just, since it's an early entry, I'll give it more time and look at the 87.5s, or for my large account folks, you can just look at the 85s if you're willing to spend, $250 for 2 weeks out. That's realistic. And if you're like, I don't want to spend a bunch of money, but if it goes, it goes, I'm okay doing the 90s. And maybe some people are okay saying, hey, if something crazy happens and it squeezes, I only spent 30 to 40 bucks. You can look at the 95 calls for a couple of weeks out. Okay. I don't like to signal that far out of the money personally, but I'm not saying that it can't do it. And you turn 35 into a couple $100, right? So that's some free game for you. Do your own due diligence because I'm on a public platform, but give me a 10 in the chat if that's good, if you like that. Keep Uber on your watch for a consolidation, pullback, bull flag right here, sitting at 80 to 81, 82 for calls and or shares to try to reach back to 90, 95, and then ultimately $100. We good? Good. Tesla has a gap up between 387 and 400 to the upside. Yes, it does. Yep. I want I want that to get back above 370 on Tesla. Yep. On your watch. Yeah. Not a lot of money too, Trent. Nice move as well. So you don't have to spend a lot, and you can kind of keep a little bit closer in the money with time. Right. So that one's also, Trent, inside of our group. All right. So you can go to the Uber chat. So for anyone that wants to know what it looks like, anything I'm mentioning here, I'm giving guidance on it exactly, either when I'm entering or when's an even better entry, which is right here in this specific chat for Uber for trade ideas. Okay. So there we go. All right. Now, the more I like certain things, like you can even push it out further. So for example, another date that I really like is July 18th for the summer. Okay. So just say like, man, what if I don't want it that short? I mean, that's even a good price for a 95 call and even a 90 call for 2 months out. So you see the title of this stock sermon Sunday is kind of like summer stocks or things that I can just hold. It has a couple $100 into it, or I can put time. I can chill with my family. I can work on my business, do other things, and I'm not stressing day trading necessarily. So you can even look at the 90, maybe even 85. If you want to spend a little bit more money, just keep it in the money for less stress. Right? 85s for July 18th, 90s for July 18th, 95s. Some of you may even want to say, hey, I'll look at 100, right? For Uber for July 18th, right? So keep an eye on that. I think personally, Uber is going to move in correlation with Tesla. And if Tesla is bullish typically for June, I think Uber is going to try to follow and try to keep up with that. It looks really good sitting above this 80 to 82 range. So keep a lookout for July 18th as well if you want to put more time. For those that are looking for entry, and I'll sum up right here on Uber, I think that's the next question a lot of time is, do I enter tomorrow, Brian? Do I enter this week? Do I enter? As long as it's above 80 to 81, ideally 82, you can start getting, as we call starter entry. Just put more time on it. So the first entry is always just a starter entry, meaning one contract or two contracts for you, or however much money that you want to put in to just get started. The more we like it, I may add another contract or a couple more or whatever it might be. So the safer to enter tomorrow and into July 18th, or excuse me, the safer entry, if you enter tomorrow or sometime this week, would minimum June 20th, minimum. If you're like, hey, I like it, I'm going to get a starter. Maybe I spend $100 or less and I'll get July 18th. And if I like it more, I'll add a little bit more. Right. But I do think that sometime this week, we may push down into 80. That could be another entry there. So I'm going to wait for that 80 entry if we get down to there. But I'm not going to enter too early. I kind of want to wait and not get too antsy because, sometimes we get a little too excited about it, but we got to wait until it reacts. So that's a good level right there, previous highs. And then you see that bounce right there. So if it pushes down to 81 or 80, I like it even better. I just kind of want to react and watch it. All right. So we'll watch that inside of leverage, 80, 81. If it gets above 86, that's even better for a confirmed entry. All right. Cool. HIMS. Let's go to healthcare. Healthcare all on watch all summer, all couple of next weeks. Healthcare. Every healthcare stock looks like a bullish momentum move. I just showed you HIMS. Where is it trying to go? HIMS is trying to go back to 66 and back to 70 ideally. I think it's just trying to get back to that $70 level again to try to retest the high. Okay. So as long as HIMS is above $50 to $52, okay, is going to try to go back to 65 and then 70. Okay. As long as HIMS is above $50 to $52, it's going to try to go back to 60, 65 and $70. So kind of treat it in $5 increments. Okay. So we've got HIMS in your long term. Looks great. This looks like a nice bullish consolidation. Tries to push up back to 60, above 60. I think it's going to get moving pretty quickly. All right. So those are your levels on HIMS. I'm not going to give contracts and go into every contract on everything. UNH, I'll mention this. It is a big player, but UNH has a lot of upside potential here. As we see, everybody's been talking about UNH for the past couple of weeks, and it's been consolidating. Okay. So the best contract I like for UNH, I'll just give it if you're trading it. If you're in shares, if you have a long-term portfolio that you can buy some shares, partial shares, full shares, whatever. I think anywhere between 250 to 300 is a great, dollar cost average range. 250 to 300, anywhere in between there personally. Load up if it gets below 250. But let's see here, contract wise, I don't see it going anywhere but back to at least 400 minimum. Right there's too much upside potential on this for this to not go very quickly to 400 at some point in the next couple of months. All right. I'll get, more bullish on it above 400, but that first gap is going to get filled pretty quickly. We just don't know when. So if you have a larger account, if you can't afford the contracts, I know they're pricey, and I know people want it, but let me just look here, see if I can find something really quick. August 18th, 400 is my target roughly. $400 for the potential to double, triple, quadruple that. That's a possibility. So I would look at August 15th for that 400 target. If you're willing to spend, I know I have some people that watch me that are willing to, that spend $800, $900, $1,000 on contracts for swing trades, right? 350, you can look at those as well for August 18th, just to be safe. For anyone looking at that July 18th date, that's another date that could be potential for some movement up into that date, the 350, and then maybe 400s. Got some interest on those for 400 into July 18th. So I'll pay attention to those July 18th and August 15th dates for anything that may take some time to play out. So UNH healthcare, that looks good. Headed back towards that $400 level, 380 and 400 within the next couple of months, in my opinion. All right. I like entry. You see it's holding and building kind of right here, and then holding that 290, holding that 290, holding that 290. It's starting to build off of here. And it just needs one spark. Just needs one spark. So maybe above 306, we can get interested again above that 306 level. All right. Healthcare. See if any more healthcare really quick. Almost every single healthcare stock looks, some are bigger than other, obviously. Eli Lilly, big player there. We'll just have to see and wait and watch and see if it holds that 700 to 720 level. Probably need to see Eli Lilly break above that 760 again. Make sure it gets above that previous high, 750, 760. Breaks above 750, it can get moving pretty quick, probably back into 800. But I would probably just look at the rest of the healthcare stocks. So Eli Lilly, Moderna, that will be very interesting as well. See, it's consolidating here, starting to break out of this kind of wedge right there. So Moderna could be very quickly to 30. This is also a very affordable one to put time on. So if I go straight to July 18th, Moderna, you can see there, you can go into the money on that for 30 to July 18th. So if you're in the healthcare sector and you want to trade, but you don't want to put a lot of money into it, and you're like, man, maybe I'll buy some UNH, or maybe I don't want to spend $1,000 or whatnot, I'd pay attention to something like Moderna as well. I'll go to Merck next, but Moderna, 30, $150, very reasonable per contract. I wouldn't go too far out of the money here, so 35 at max, but for $150 to keep it right in the money at 30 is very realistic pretty soon on Moderna, in my opinion, with this consolidation and build right there. That's how it should look. If it breaks above 30, then we can get moving into that next level. Okay, but I like this consolidation and kind of consolidating, starting to push out of this level. It went to 30 very quickly, pull back. Let me see if it's on a moving average. Ooh. It's on a daily 20. It is sitting on a daily 20 moving average right here. If you know, you know. Okay. I'm on a daily time frame. It's sitting and pushing off of this daily 20. Breaks above 27. I think some buyers will step in pretty heavily. So I'm starting to like this almost immediately for entry potentially sometime this week, or getting a starter entry potentially. All right. But still need to see how it reacts, but I like it just pushing out further into July 18th. If you want to look at June 20th, you can, but there's no reason to. I think they have earnings. Do they have earnings? They just had earnings in May. So, but I think there's some healthcare events coming up as we talked about. So They're building for something. Something's coming up. And if I look at option statistics, a lot of call volume coming in, 27.5 calls versus puts, 27, 30 calls, 30, 0.5. So there's a lot of call volume coming in there on Moderna. Moderna. Let's go to Merck. And that'll be my last one. Same kind of thing sitting here. Same kind of thing. So Merck, another one sitting here above this 75, consolidating, needs some kind of bullish momentum out of here a little bit more just to be more confirmed. This is kind of an early entry because it still has a little bit more room to potentially fall lower into 70. So I want to be a little bit more mindful that I want to see something come off of this level first. But if we get any type of bullish momentum or big pushes or something like that, or news, it's something that we want to pay attention to. Again, another mover that may take some time, but I look at July 18th again on something like this. You can see there's some interest on that 65 put. So I'm just wondering if they're seeing something that we're not. All right, still some interest on that 70 put. So may wait for it to pull down a little bit more potentially, but getting interested in a lot of these healthcare stocks into the summer months. Okay, just gonna be watching. All right. Yes, Uber calls at $90. Love it. Tanvir's on board. Let's go. Let's go. Let's go. I want to come back to a stock summer Sunday and everybody, I would love to see half of y'all, more than half of y'all inside Leverage University. But if y'all want to just chill in sidelines, you're more than welcome. So we'll let everyone know inside of Leverage when we actually enter. But yeah, I'd love to come back here and be like, Uber calls. Did everyone bank? Did everyone bank? Did everyone bank? So let's just go back to that to end off on a positive note. We're at the top of the hour. Give me some love in the chat. Give me a like, all those good things. Maybe screenshot this, tag me, share, whatever. I'd really appreciate it. Make sure you're subscribed, all those good things. Let's go back to Uber one more time and let's look and see again into that July 18th. Uber calls 90. I think it would be the safest and most interesting. Right around $200. If that goes to 90, you can cleanly hold that potentially into 100 if it gets moving. So yeah, if you can do that, I would say that would probably be the best contract, the safest contract. That would give you 2 months roughly to hold those calls through pretty much the summer. And well, Brian, why wouldn't you choose July 11th or July 3rd? Right? I'm looking at spreads on these contracts, and I'm also looking at the amount of interest and volume that's on the contracts, which will allow those contracts to move a little bit better. So it's a whole separate conversation about options around which contracts to select. But yeah, you could choose July 3rd, but look at the spread on that. 122 to 181. You get a bad fill on it or something like that. It will move, right? But I'd rather go to something that has a little bit more volume on those and a little bit more interest where the spread on the contract's a little bit tighter. So I'm going to get a better fill on that contract, a lot better price on that contract, and a lot more movement on that contract. Okay. So that would be the best. And then that's why I went straight to June 20th, right? You see the volume on those 90s already, and also the interest on those 90s already. Yes, if you look, you can get analytical and see interest on the put side and whatnot. But I do my analysis first, and then I look at what's the best contract that I could see moving the best. Okay. So Tanvir's on board. I like it. Love it. Retest, bull flag, go back to 90, and then try to get back and take out the highs and go to 100. Uber, top watch for the next couple of weeks and throughout the summer months. Healthcare as well, and then we'll keep an eye on our normal tech stocks. All right, folks, I've been here long enough, but this is a new month. I want to give you all some game. I want everyone to succeed. I want everyone to have some fun this summer, make some money, and let's not stress out about this thing. It's supposed to be fun. Right. So pick up shares, trade, understand, join Leverage University. Give me a shout out if you love these, all those good things. Appreciate you. Any final chat questions? Checking the chat one last time. Checking the chat. Any final last questions? Appreciate y'all. Love it. All right. We're good. All right. Thanks y'all so much. Peace, love, and blessings to you. A little bit longer than usual, but want to give it a go. And I'll see y'all in the next Stock Sermon Sunday and also inside Leverage University and my one-on-ones. Looking forward to working with y'all this summer, and we'll go from there. I'd like to join Leverage University for a 2-week trial. If that's something you consider. Slowly building up my cash. Yeah, we'll consider it. Yeah, we'll consider it. You're a big player though, Tanvir. You don't need 2 weeks, man. What are you talking about? Tell that man. Now, I always consider things. I may not be able to do 2 weeks, but I maybe do a couple of days or something of that nature just for you to get in. But 2 weeks, a little bit longer than I usually do. All right. But message me, Tanvir, on my Instagram DMs if you can. If you got Instagram, most people do. And I'll see what I can do. But 2 weeks, I'll just tell you right now, a little bit much for 2 weeks. But maybe I'll do a little something. Cool. Love y'all.